Guys, welcome back to another wonderful session. In this session, we are really going to jump into the world of accounting, and we are going to understand each and every concept by each and with good conceptual clarity. Here in this session, we are going to speak about 10 to 15 adjustments which you are going to come along with what is the background of profit and loss account, what are the methods to prepare a balance sheet. So many of you don't know what are the methods you are having. Okay. So first thing, we are now getting into the world of profit and loss account. What is profit and loss account? Okay. So here, profit is calculated. Here a profit is calculated on two folds, two types. Okay. One is profit from sales. Next one is profit of organization. Profit from sales and profit of organization. If it is a profit from sales, we have already seen it is a gross profit. From trading account, we are going to see. Now, if I want to find out for profit for organization, I will take the gross profit from my trading account. And I will add that indirect items, that is indirect incomes I will add. What is the income apart from sales I have done? That income I will add it to my profit. From that income, I will subtract my indirect expenses to earn my indirect income or to make some sales. That I will subtract. Then finally, I arrived at one point. That point is known as profit of organization. Profit of organization. This profit of organization is known as net profit. This profit of organization is known as net profit. This everything is done through an account known as profit and loss. Profit and loss account. Next. Now, here we are going to decode what is indirect expenses and what is indirect income. Indirect expenses are those expenses indirect expenses means an expenses related to, first thing, it will be related to management and administration purpose. Any expenses which I are committed to do for administration, that will be treated as indirect expenses. Then maintenance expenses. Then selling and distribution expenses. Any financial costs, that is financial expense like interest paid, bank loan interest is paid, that is financial expenses. Then any abnormal loss you have taken, that we will consider as an indirect expense. Okay. And here we will apply one more point. Kindly note down the point. First thing, it should be current year's expense. It is only related to current year's expense. Okay. Because of periodicity concept we are taking. We should take a periodicity based on a periodicity concept. It should be only one for the one accounting year. Then it should be considered after applying prudence concept. What is a prudence concept? That is, you should only account for future estimated expenses or losses. Okay, that is provisions and risk. Due to prudence concept only, we are crediting provision for discount on debtors, provision for doubtful debts, and all we are doing. Okay. After that, one more point should be considered. It should be considered or it should be calculated. That is, indirect expenses should be calculated by applying concept of accrual basis. What is an accrual basis? That is, only to entire current year's expenses, okay, should be transferred to profit and loss account, whether paid or unpaid. Okay, how you are going to transfer it to P&L account? Like what we have seen in NPO, the same type we are going to see it here. First, we will calculate expenses paid in current year. Entire expenses we will take. From the entire expenses we have paid in the year, we will take. From this, we will add last year's prepaid, because it is not related to the current year. Okay, sorry, last year's prepaid. Previously, I have already paid for that current year. That is, in brackets, I will write down paid in last year related to current year. So it is related to current year. I am going to add. Next, less. I'm going to less few things. That is last year's outstanding, if any, which is paid in current year. That is last year's outstanding paid in current year. Last year's outstanding paid in current year, I am going to subtract. Next, I'm going to add one more thing. That is current year outstanding. It is related to the current year. We need that expenses of the current year, whether paid or not. Okay, so current year's expenses not paid, that we will add as per the accrual concept. Next, we will deduct few things. That is current year's prepaid. That current year's prepaid, that is paid in current year for next year or for future year, that we will going to subtract. Finally, some value will come. That value is known as amount of expenses transferred to profit and loss account. Are you able to understand this expenses part? This entire thing will be given in adjustments. Okay, this will be forms part of your adjustments. So we'll go to the next part. That is related to indirect income. Related to indirect income. What is an indirect income? Any income which is other than sales. Any income which is done other than sales. What are those income which is other than sales? That is like interest income, think about some points. Bad debt recovery, okay, then rent or commission received, okay, then discount received, then profit on sale of assets. Profit on sale of assets. It's an income other than the income. Okay. Same by applying the accrual basis here. Okay. By applying the accrual basis concept. Accrual basis will be considered as FAA. This is what you have studied in AS1. Correct? I am connecting AS1. What is the AS1? Fundamental accounting assumptions. Accrual concept, going concern concept. That's all you have studied. No, on that basis, it is a basic fundamental accounting assumption. On the basis of accrual, entire current year's income should be transferred to profit and loss account, whether, note my words, mark my words, whether is received or not received. Whether I receive the value or not receive the value, I am going to show it in my P&L. Okay, for that purpose, I will give you the same type of chart. Calculation of income earned in current year. How you are going to calculate? First, take out the income which is received in the current year, which is inclusive of maybe the last year, maybe the next year as per the case. We will take that value. From that value, I am going to add one thing, that is last year's pre-received income. What is last year's pre-received income means? That is received in advance, that is related to current year. I am going to add that part. Okay, and then next one, I will less few items, that is last year's accrued income. What is an accrued income? Income which I need to be received. Okay, that is in simple, if I want to say, it is receivable, which I need to be receivable, that I will deduct, which I received in current year. Last year's accrued income means last year's I need to be received. In this current year I am receiving, so I am going to deduct it from my current year account. And then I will add current year's accrued income. Current year's accrued income I am going to add. Then I will take current year's pre-received income, which is meant to be for the next year. That is not at all relevant as per the accrual concept of the current year, as per the periodicity concept of the current year. So I am going to deduct that part. Okay, that is my final value I am going to derive. Okay, that is income of current year transferred to profit and loss. Are you able to understand this part? Okay, and here I will give you 2 to 3 statements. Write down those 2 to 3 statements. Important 3 statements to 4 statements. Write down in your notebooks. Statement number 1. Write down current year's outstanding amount. Current year's, it is related to indirect expenses is related to indirect expenses. Okay, current year's outstanding and prepaid suppose does not appear in trial balance. Not appear in trial balance, then since but adjustment entries are passed after trial balance, hence we are given with the adjustment entries, that is additional information you have given. Then hence outstanding and prepaid expenses, if any, you need to do two. First one, you should add or subtract from expenses as shown in indirect expenses part. The chart we have prepared, no, that chart, the table or format you can say, as per the format. Okay, before transferring to P&L. This is the one probability. Okay, and whenever it does not appear in the trial balance, you need to make two adjustments. One is done. Next one is current year's outstanding and prepaid. PP means prepaid. Okay, should also be shown in one more account, one more statement. That one more statement is known as balance sheet. That one more statement is known as what? Balance sheet. This is your first criteria under indirect expenses. Then the second one, if current year's outstanding and prepaid is appearing in trial balance, what you need to do? It is already been appearing in trial balance. You will, it implies that, it means that adjustment entries are already passed. That is, adjustment entries means adjusted journal entries and ledger has already been passed, is already passed. So before the trial balance is sold, then in those cases, any current year's outstanding and prepaid should not to be added or subtracted as shown in format. Okay, it should not be added when there is an appearance in the trial balance, but the second points will remain the same. We will show it in only one time, that is current year's outstanding. Write down current year's outstanding
Recording in progress.
Current year's outstanding and prepaid should be shown in balance sheet. It should be shown in balance sheet, but you should not add it in the, because it is already been adjusted. We are just posting as a positional item. For an appearance, if it is appearing in a trial balance, you should not post it in that respective P&L account. Next, regarding the same points which I given it for, I want to be given for those note for indirect income. Write down the same point in your notebooks. I'm just going to dictate you. Just write down current year's pre-receive. Current year's pre-receive. Write down current year's pre-receive. And accrued, which I need to be received, does not appear in trial balance, does not in TB. TB is nothing but trial balance. It means that it implies that adjustment entries are yet to be passed. Adjustment journal entries are yet to be passed. In those cases, current year's pre-received income, PRI means pre-received income. That is an income received in advance. Okay. And accrued should be added or subtracted from income received as shown in format. What format? That calculation, respective calculation format. Then also pre-received income, that is in bracket I will write down, that is an advances received. For that advances received, I need to provide some services. That services I will treat it as my obligation. That obligation, if it is an obligation, it will becomes my liability. I have some responsibility for towards that income, so I will treat them as liabilities. And accrued income. Accrued income should be shown in, both should be shown in balance sheet. What is an accrued income? Income which I need to be received. I have the authority to for towards my money. That is to becomes my asset. Okay. Next B point. That B point that is write down current year's pre-received income. Current year's pre-received income. Current year's pre-received income. And accrued income. And accrued income. Suppose appear in trial balance. Appear in trial balance. Adjustments, that is adjustment entries, is passed already. Okay, it is passed already. Now, do not add or subtract as shown above. You should not do that format as shown in format. You should simply appear in balance sheet. It should simply appear in the balance sheet. Nothing more than that. You should do it from your end. Simply, if there is an appearance in the trial balance, you will simply just post it off. Okay. Next one, we are going to another interesting area, which most of the students will feel it is a difficult area. Most of the students don't remember this part. I will assure you, they don't remember this part. Our next topic we are taken for our discussion is balance sheet. What is it, balance sheet? Sir, we know balance sheet. We know to prepare how the balance sheet. Yes, you know, but listen it properly. Listen it the background logic. Why the balance sheet has been prepared? We are balancing the all the assets, all the incomes, all the liabilities which we have committed during the year. It is nothing but is a statement prepared by an organization as on the last date of the year, that is financial year. Obviously in India we are calling financial year. Containing, what it will contains, you already know that basics. Containing the value of asset. We are not simply merely presenting, we are calculating the final value. And liabilities, that is we are owe, that is on liable as on that date. Is that date is nothing but the last date. That date is nothing but what? This last date. Okay. Showing what organizations or business organization financial position. It shows organization financial position. Okay. Next. Here the important point comes to a picture. Balance sheet can be prepared under two approaches. They have already tested the MCQ in this part. That is, first thing is next. Here we are having two approaches. One is order of dash. Next one is order of dash. One is order of liquidity. Next one is order of permanence. There can be a good possibility that it may ask in your examination, what is order of liquidity? Order of liquidity is nothing but it is the order of assets. It is an order of assets. Okay. Next. Assets which are to be converted into cash first or presented first. How? I will show you. This is a balance sheet. Okay, and even you can take the liabilities also. This is the liabilities. This is an amount, asset, amount. Correct? In this part, order of liquidity, easily I will get a cash. What is the immediate thing? I will get a immediate cash, or I will have a cash in my bank, or I will have my government securities. Then I will have my investments, readily saleable investments. Then I will have my bills receivable. Then I will go to my debtors. Then I will go to take my stock and sell this part. And I will go for furnitures and fixtures. Then I will go for plant and machinery. And finally, only I will go for land and building. That is an order of liquidity. Then in case of liability, bills payable will comes first, and then creditors liable I'm going to pay, then loans, then outstanding expenses, then pre-received income, then resource and surplus, that is nothing but profits. Then finally only I will go to capital. This is how the presentation will looks. Then what is an order of permanence? It is the most of all the presentation of order of assets. Majorly it is an assets. Okay. Then what is an assets? What is a permanence speaks about? It is first, which is converted to first, which are presented first, that is liquidity. Assets which are used for long term, having an intention to use that asset for long term, and or not be sold, or presented first. And liquid assets, you will connect it through financial management ratio analysis, preparation of a ratio analysis. In that ratio analysis, you have a liquid ratio. Liquid ratio is nothing but quick ratio. That is liquid assets or a quick assets divided by current liabilities. You will do that part now. That's what we have seen. That is an analyzation of a transaction, analyzation of a financial statements, or presented at bottom, which is on the top. Long-term assets will be on the top. Then my balance sheet will be like this: liabilities, amount, assets, amount. In those cases, it will be reverse ladder: land and building, plant and machinery, furniture and fixtures, stock, debtors, bills receivable, other investments, government securities, banks, cash, everything. Liabilities includes capital, reserves and surplus, that is a profit and loss, then general reserve and all, pre-received income, then outstanding expenses, a loan, creditors, bills payable. Now you will say, in most of the cases, which method we will prescribe? We will go for order of permanence. We'll go for order of permanence. In the liabilities, it is known as marshalling. This concept is known as what? Marshalling concept. MARSHALLING. Marshalling concept. Okay. The concept which you are doing now, that concept is known as marshalling concept. Under the marshalling concept of the balance sheet, we are having two. One is order of liquidity and next one is order of permanence. Okay. Now write the important point. Which order should be passed? For which type? I will give a note here. Write down the note. Write down the note. Banking sector, and finance sector, that is banking sector and financial companies, for them money is the most urgent thing, so they will follow liquidity order. They will follow what order? Liquidity order. If the organization, alternatively, if the organization is, you may get a choose from it, choose the best answer. If the organization is going to dissolve in near future, maybe for 6 months or maybe for 8 months, that near future for 3 months or like that case, then it may following liquidity order. It may follow the liquidity order. It may follow the liquidity order. So liabilities may be made And one more point you should be note down. Liabilities may be in order of urgency. What is an order of urgency of payment? It is nothing but which you will pay it immediately. That is, bills payable is most urgent, which I need to clear my trade bills, and capital is along with me. I'm going to invest in the business, so it is the least urgent. Okay, so this balance sheet we will be prepared at the year end, and at the beginning of the next year we will carry forward the balances. At year end we will carry forward the balances to next year by passing an opening entry, opening journal entry. What is the opening entry you will pass? It is asset account debit. All the assets we will debit. We will credit the liabilities. We will credit to capital. Capital is a owner's liability. Remaining liabilities is an outsider's liability. Okay. So this is how you should follow a question. With this, we have seen a concept of trading account, profit and loss account, and the balance sheet. The most important items we have discussed it. Okay. So in our next conceptual class, we are going to see the 10 to 14 adjustments. Okay, 10 to 14 adjustments we are going to see.